Good morning, good afternoon, good evening, FF family. Today is Saturday, June 28th, 2025. This is episode 25. What would you do? That's the title and the agenda today. Appreciate everybody for joining the Freedom Finances podcast. My name is Dylan. I'm your host today. I'm here as always with Bradley and Nick from a little breaky. We appreciate you coming back, Nick. Before we get into all that, I always want to ask, what's going good in your life? I'll start. Expedition 33. If anyone's played that game, I'm sure you've heard of it if you're into gaming at all. It is worth the Game of the Year title. I have officially not only beaten the game, I have platinumed everything on a lot of games on the Xbox. My first official platinum on the PlayStation with it. I love the game. It was fantastic. And probably a 9.8 or a 10 out of 10 for me. Just some story elements. Wasn't the biggest fan. But that's my thing.
Not a 9.9 though. Either a 9.8 or a 10.
If you know the story, you'll understand why.
Okay.
I promise it makes sense. It makes
all
sense.
I've heard about that game is that there's a bunch of expeditions, and one of them they were all naked and got really buff and went on their expedition. Is that a real thing or is that like fake news?
No, that's
It's a real
one of the expeditions beforehand did get buff and get naked, and they beat them with their muscles. That was the thing. I thought it was a joke too, and I found the journal. That's it. I think it's like in the 60s, Expedition 60 something.
Nice.
So
Okay.
that was so obscure. That's funny. I thought you randomly came up with that nugget of knowledge about the game. Some people are like, it's like Paper Mario, right? Like, yeah, it's pretty much Paper Mario, Final Fantasy.
Huh.
No, you know about buff naked people fighting.
Naked
That's
people.
great. That's good. All right. Well, hey, Nick, since you started to chime in, what's going great with your life?
Yeah, we just we went to a concert yesterday. I'm not like a huge concert guy. It was the Yin Yang Twins and a few other people, and it was pretty cool. It was in Lampe, Missouri, which I was like, I don't even know what that is. But it was pretty fun. I felt kind of bad though. One of the Yin Yang Twins, you could tell he was kind of old and he was kind of like limping across the stage.
Hey, back in my day, we got there in St. Louis.
But it was super fun. It was very nostalgic for me, so I liked it.
All right, perfect. Bradley, what you got?
I have a quick story to explain. I think I've mentioned this before, but Colorado Springs is super dry, like deserty climate dry. Doesn't rain a lot. When it snows, it melts right away. But houses in Colorado Springs have like a built-in through the HVAC humidifier. And this humidifier, just like a small one might, keeps the whole house humid. So it gets so dry in here that a couple of years ago, I went to get water out of my fridge and it shocked me and it literally sparked and hurt me. It broke the fridge ice machine, the ice maker. That's how dry it was, that the spark from me touching it broke the ice machine in the fridge. Anyways, I turned off our humidifier last year, and since then, like, our AC hasn't been blowing correctly. Like, it just keeps blowing and then it wears itself out and then it gets really hot. Well, we had someone fix it today, and it was all because of the stupid humidifier was set really high. And it's all stuff like, I didn't know this works like this. I'm from where you guys are in the Midwest, where there's not a built-in home humidifier. Anyways, our AC works now again, and I'm very happy about that.
Great.
Yeah.
Well, they don't make them like they used to, That's what I always say.
That was a fascinating story. I'm just
You're
gonna
welcome.
share that.
Your life is really crazy, by the way. I don't know how you wake up and just not make a movie. That's how crazy this is. All right,
That's my
moving
good
on.
news. My good news is my AC works in the middle of the
I'm-
summer. Why wouldn't that be
okay.
good news?
No, it was the story before the good news that was hilarious.
There you go. It's a funny story. You're welcome.
I
You're
love it.
welcome.
Okay, so we're going to move on to the investment draft. So for everyone that doesn't know, each week we go over the investment draft where these two people initially set up $100,000 into the stock market to invest into the stocks that we chose in a draft back and forth. So this week, we got some upsets happening. I think we got the wind of change are breezing through the podcast. So I'm actually going to start with Bradley this time because we got some good news coming up for Nick, I think. Bradley, so starting off with you, you are currently sitting at $103,000, 282.43. You are at an almost 3.5% up. So congratulations, that's awesome. Your biggest winner is Nvidia at plus 20%. Biggest loser, McDonald's, down 5%. So let's start with McDonald's. What's going on? Why is that going down?
Literally, McDonald's was one of my biggest winners a couple weeks ago, which is crazy that it plummeted so much. I think they had bad like quarterly sales reports, and this franchise issue is like killing them because franchisees are like really raising the prices, and it's kind of like screwing McDonald's. Is like, depending on where you go, like in California, like a double cheeseburger could be $5, you know? So the franchisees are just raising prices, and then the company's trying to get their profits, and it's just kind of like a little messy right now in McDonald's. So that's what's going on with them.
So I haven't heard this story yet. So
Yeah.
the franchisees are just raising prices higher than what the actual McDonald's wants.
Like a cheeseburger in Springfield, Missouri is not the same price as a cheeseburger in Colorado Springs.
Right.
So, like, depending on where you are, like, there's franchisees that own 4, 5, 6 McDonald's, and they have the option to raise their prices, and they usually say, like, oh, based on, like, the cost of meat in this area or labor or whatever, it goes up and down. So anyways, this is happening, like, where some places, like, the franchisees are just skyrocketing the prices, and it's kind of hurting the public image of McDonald's.
Gotcha. Okay. And Nvidia, what's going on there? Why are they doing so hot?
I don't know. They're just it's funny because Nvidia like 6 months ago was like one of those really like those stocks that just kept going up and up and up. And right around our investment draft, they went down and down and down. Like AI chips were an issue, especially when it came to tariffs. Like people were really afraid of like tariff production in Taiwan and places like that. I think all that stuff has settled, and Nvidia's had some good news lately. They're selling a lot of stuff for other people producing AI, so they're kind of back building up.
Gotcha. And it feels like it was one of the tech companies that was naturally dropping anyway. And we've kind of seen the rebound in tech a bit,
Yeah.
I would say. Like, well, in the stock market in general, but definitely in tech. I feel like you've either stabilized back or you are on the rise for sure.
Yeah.
Anything else to add? You're doing great.
No, like you said, there might be an upset, but you're wrong because I'm still ahead of Nick. So spoiler alert. So
Right.
There might be an upset. Spoiler. There also might not be.
Well, whenever we have officially decide to end this draft, then we'll call it official or not. Nick, going to you. So currently, right now, for the first time since the draft started, you are above $100,000. Congratulations, by $19.99. You are actually up 0.02%. So congratulations, proud of that. Your biggest winner, Netflix, 22%. Your biggest loser, still Starbucks, down 22.7%. So let's start with the positive. What's going on with Netflix?
Yeah, I think we talked about Netflix a little bit. They were kind of cracking down on some different like password sharing stuff, and creating new content and things like that. I think they're just kind of getting leaner, and shareholders are starting to see some added value from that. So I don't think it's anything crazy happening with them. I think they just had a solid business model that's consistently doing pretty well. It's one of the few blue chip stocks that I have that's doing good, so I'm happy about that one.
Nick,
sure.
do you think they're going to do a stock split anytime? Because they're at $1,300. That's crazy.
I mean, maybe, I don't know. I feel like stock splits are kind of like they got popular again in the last couple of years for whatever reason. And yeah, $1,300, like maybe, I mean, heck, they could do like a 10-to-1. I think that seems to be the ratio that people are liking to the stock splits, but it doesn't add any value. I know it usually, I'd say like 80% of the time it's going to raise the stock price over the like 12 months after, but there's no actual value added. So I don't know. It seems silly to me, especially when you can buy fractional shares now. It's like, what does it matter?
I know, the fractional shares makes it like, well, why does it matter?
You know what
it's
I
all
wonder?
just a psychological thing, I think. But
I'm kind of wondering, just as your average viewer, what the heck is a stock split? Does anyone want to explain that one to me?
Yeah, like imagine I give you a slice of pie and I'm like, here, Dylan, here's a slice of pie. That looks really cool, right? What if it was 2 slices of pie and then I cut it in half?
Whoa.
And that's a stock split, basically. Like however many shares you have, like if you have 10 and I do a 10-to-1 split, those 10 shares become 100 shares, but it's exactly the same amount, like value-wise, a portion of the company, like it's the same thing. You just split it up. The idea is like if a stock is $1,000, people might not buy it because it's too expensive, but if it's 100, you might encourage other types of investors to buy. But it's the same thing. There's no extra value that you get. So
the stock won't go down from $1,300 when you split because you like inflate the amount of shares you have, correct?
Yeah, the stock will be $130, but you have 10 stocks, essentially.
Perfect.
Yeah.
Awesome. Yeah, that makes sense. Like when you go so high, it's
one
hard
other
to
thing
invest.
is it does give the company an advantage to buy more of their own stocks at a discount. So it's like more of it. It's kind of like, hey, Dylan, do you want this? It's a lot cheaper now, but at the same time, I can buy more stocks. Like the total quantity of stocks increases, which allows the company to invest more and have a larger portion, but it's still the dollar amount doesn't really change for investors.
Gotcha. Okay. And for everyone as well, so when you invest, there's not I guess as the company, what's the main advantage for the split stock advantage here? It's mostly just get more investors into it. Is that correct?
Kind of, yeah.
The idea is that your prices will go up because more people will be buying it. But it's not like, I don't know. It seems silly to me, but it does work quite a bit. So it would probably make sense to add shareholder value to split. So
yeah.
All right. Cool. All right. And Starbucks. What's going on with Starbucks? We feel like we're having the same conversation every time.
I know, recently. Right? I'm not down as much as I was before, though, right? Like it's still down, but it's not as bad. Didn't it get better?
Were down like 45% at one point.
Yeah.
Yeah.
And
I think Starbucks is getting better,
20%,
right?
And it went down to 22.
Oh, is that what it was? 20.
Yeah.
Okay. Yeah. No, I think people aren't buying as much coffee. No, I saw some stuff that Starbucks was doing, but none of it was really with its like basic business model. Some of it was just like other investments that it was holding and things like that. And I think that's why they got a little bit better. But I mean, the average business model I think is pretty much the same. Nothing's really changing. They had the fight over the new uniforms, which I think Allie just got one of those, and it's a black shirt with a Starbucks logo on it. So I'm glad they really solved that crisis. But yeah, I'm not sure what. I'm hoping in the long term it comes back around. But yeah.
What was the gain from just causing this like uproar over an outfit? I really am so. Am I missing something with that? I don't really understand.
Maybe it's publicity. No press is bad press. I don't know.
Okay, so I'm glad we're all confused.
I think though with like Starbucks and like technology, one thing that's changed from like 40 years ago is like you can buy an amazing TV, a 70-inch TV that's OLED. You can mount it, and it's a good price. You spend $1,000, $2,000. 40 years ago, you got a 20-inch TV, like top of the line. That was $5,000-$6,000, So like those things are changing. Coffee was dirt cheap, but now coffee is expensive. So it's like the world kind of has to adapt to like some prices are going down, especially with technology. Technology just gets cheaper, but like companies need more profit and labor costs go up and coffee beans go up, whatever it is. So like coffee's kind of going up, but technology's just getting dirt cheap. So it's kind of one of those things where it's like things are just feel really weird right now when it comes to prices of coffee versus an AI chip or what have you.
Yeah, because like for example, not to get too far ahead, but the economy is doing pretty good right now according to reports and things, and some people just probably on their day-to-day wallet not really feeling it. It's kind of the vibe I'm getting, especially when it comes to coffee, for example, like those day-to-day stuff they're used to. Yeah. So, but we're getting to that in just a moment. Appreciate you both. Thank you for sharing your insights on your investment draft and what stocks are winning and losing. So I appreciate that. I predict next week, Nick, probably going to be a 0.1% increase. I'm feeling it. I think you're going to be doing great.
I'm just saying, it took me $100,000 to make $19.99. You got to spend money to make money, I guess. So
I'm pretty sure with your investor
over
fees.
like 4 months. So 0.02% divided by 4. you know.
I think
Okay.
I think the real
Return.
question is going to be is like, not how you initially gained your $100,000, but with only 1999, I don't know how you're such a good investor to begin with, and it still fell apart. So we'll see how it goes from there. All right, gentlemen, we're going to the first topic today, which is gas prices are low, oil prices are low. Why? I'll start with Bradley. Hit us with it.
So, just with gas and oil prices, it's funny because I think it was Monday I made a news video because, like, what was it, Saturday we bombed Iran, right?
Yep.
And there's the Strait of Hormuz, which controls 20% of oil production in the world, or 20% of the oil production goes through it.
It threw it. Yep.
So, like, immediately there are reports that Iran was going to close it, right? So gas and oil prices skyrocketed. And then, like, there was the ceasefire, and they didn't close the Strait of Hormuz, and Donald Trump said, like, drill, 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 or whatever, and then gas prices, like by the time I released the video, the news video that said gas prices were up, gas prices were already down. Like, by the time it took me to edit it and put it on YouTube, like, literally within an hour, they were up and then plummeting. And since then, they've just been going down and down and down. And, like, gas prices are one of those things where, like, inflation works differently. Like, when it comes to groceries, some of them always go up in the long term. Gas prices can be stagnant, can be lower, can be more than you paid 20, 30 years ago. But right now, you should be seeing, probably in 2 weeks from now, you'll see what the gas prices are now, which are, like, lowest they've been in 5-6 years. So when you go fill up your gas tank, let's say in the middle of July, you'll see really cheap gas prices. Some of it has to do with, like, people freaking out and oil production increasing. Oil production increased while there were no issues with actually the Strait of Hormuz. So it was like crazy jump in oil production, and then it'll probably go back up, like they'll slow down their oil production. But yeah, gas prices are down right now, and you'll see it in a couple weeks.
Perfect. Nick, what do you got on it?
Yeah, no, I had to actually go and look it up because I haven't been buying gas recently, so I wasn't sure what gas prices.
We love Tesla,
right? But no, I think even with that, kind of looking into it, just demand has been lower too, and I don't know if it is, the electric vehicles and the push for, alternative energies and things like that, but seasonality, lower demand, obviously the Middle East stuff and things like that. But I think it's a combination of all of those things. But it is crazy to kind of think about inflation versus gas prices, because I'm pretty sure when I was in high school, I remember paying like $3 a gallon sometimes for gas. Yeah. And that was not to like date myself, but that was like 18 years ago.
Yeah.
And so it's like everything else has gone up in price except for gas. I mean, that's kind of cool if you think about it. But yeah, I think it's a combination of all those things that are showing you the prices that you see right now. So
perfect. Yeah, I remember back during that time, to also date myself, it was funny because a lot of like either movies or video games or TV, it was all centered around like the end of the world and this global fight for oil because prices had went up, and they really like honed in on that fear a lot. So I really enjoyed that. That was very.
I remember an episode of Futurama that had who was that guy? Al Gore. Like his head was in a jar, and he was a cab driver, and he got like $100. He's like, "This will buy me 1 gallon of gas." So I thought that was pretty funny.
Yeah, good times. All right, gentlemen, thank you for that. Now we're going to the meat and potatoes of today's episode, which is going to be over the what would you do scenarios. We're going to over a couple topics on here that I'm going to present to these two gentlemen. What we're going to do, I'm going to give it a scenario for both of them. We're still going to work in the confines of the United States. I did ask Bradley if we can pretend to be North Korea during this, but he said that wouldn't make sense for some reason. I don't understand. So what we're going to do is we're going to go over these.
Supreme leader? No.
Yeah, supreme leader. But anyway, we're going to work between these two. I'm going to go over the first topic is the early 2025 data shows the economy is very strong right now. Stock market is up. Prices are slowing. What would you do in these scenarios to combat high mortgage rates is the first one. So for Bradley, I'm going to start with you on this. So you're the federal chairman. Are you going to lower interest rates or are you going to increase them?
Okay, if I'm just looking at mortgage rates, it's kind of a double-edged sword because the more people buy houses, the higher mortgage rates kind of just go on their own, like just, through supply and demand. So if I wanted to, like, if I'm Chair Jerome Powell and I'm like, my main focus is mortgage rates, I would drop interest rates down to 0.25% where they were in 2021, right? Before they started raising it. If I just wanted to drop mortgage rates. Now, if I did it that quickly, then inflation would probably pop up. So what would I actually do if I was the Fed chair? I would say, okay, mortgage rates are somewhat important, but they're like, inflation is more important, the job market is more important. So if I were to be the Federal Reserve chair right now, I'd say I'm going to leave interest rates alone because I don't care about mortgage rates as much as I care about the other things.
Do you think the general idea right now of like pausing any lowering makes sense currently?
It depends. If you lower it, you increase jobs, right? Like, people invest more, they hire more people. But if you lower it, you increase prices. So I would say, like, the slow approach is okay. But if we're 6 months from now and the data is still really positive, then it's too slow. Like, we're being a little cautious, and that's okay because the economy, like, the numbers were struggling over the last 3, 4, 5 years after COVID. So right now it's okay. But if it's 6 months from now, we got to start doing something.
Gotcha. Okay. Nick, you're the federal chairman. Mortgage rates, are you going to lower the interest rates or increase them?
Yeah, I kind of considered Bradley's point of just like, things are going good. Why change it? Just kind of keep it the same. If you look at pre-COVID, though, and look at where rates have been since the housing crisis, they've been at a much lower spot than they are right now. I think COVID kind of jacked everything up, and that's why we had to, mess with rates and kind of, protect ourselves from inflation. But I also think that if we did continue to lower rates, and not like drastically, but maybe like a 0.25% at a time, I think we could get back to kind of where we were pre-COVID times, and like things were good for like 15 years. And so I'd love to get back to that era. I think, the housing situation, it does suck, and I know it's a great barrier of entry to like the younger generation and stuff, and maybe as we continue to lower rates, that might help them. But yeah, I would have a plan to maybe get rates back in line to like 2015 kind of time frame would be my strategy.
Okay, perfect. Now, kind of the same scenario. So we're going to combat high mortgage rates, except this time you're going to be the president. So Nick, I'm going to start with you as Mr. President here. Same question. What approach would you take to lower it? Lower the interest rates or increase them?
Yeah, I think I think I would take the same approach. I'd still want to lower them. It's such a double-edged sword too, because as you're lowering them, you're also lowering the investments for CDs and other investments and stuff like that. So you're essentially saying like, pump more money into the market, which isn't a bad thing either, because if I'm moving money from traditional savings accounts and stuff like that into the stock market for better gains, it's going to kind of help everybody. So I'd say probably same scenario. I'd continue to reduce the rates, knowing I'm going to probably make a couple people frustrated that are more conservative investors, which myself being one of those types of people. But I think in the long term, it's going to help, and it's going to have people transition into the market where you will make more money over time. But yeah, I'm going to go slow step-by-step quarter interest rate drop at a time until we can get to, because I'd have to see what were the rates, because they were almost to zero for a while, right?
0.25.
Yeah. So even even down somewhere near that is where I would try to get them over maybe like a 5-year period or something like that.
Okay. Perfect. So both kind of a cautious approach at this point. Makes sense. Now we're going to talk about the labor market. So currently right now, labor...
Real quick. Sorry, Dylan.
Sure.
As a president, I would take a more aggressive approach because I want the economy moving, right? Like, I want rates as low as possible because I want people to invest in their company. I want people to hire. I want people buying houses. I want economic activity. I want a lot of it, and I want a lot of it to happen now. You know, like churning up the economy is a great thing, like for like the world. But I would have to set aside my cautious approach. So like if I was the Federal Reserve, I'd be cautious. If I was the president, I'd be like, let's get this thing moving. Let's get the economy going. So that would be for mortgage rates. I would want them to go down.
All right, perfect. Because we're going to tie that into labor here. But for you, do you feel like as the president's because you have a 4-year term and you want to make sure like during the time you have, the need to push?
It's not about term, but it is about right now, you know? It's about getting the economy moving right now and getting as much positive movement today in 2025. Like, yeah, I get the term. It's not just to be like reelected or in this case, like let's say it's Donald Trump, you know, like he has 4 years to make his impact and then he's gone forever. So I think in this case, like I would just be like, I want things moving now. Like the economy looks good on numbers, but we need things going, you know? So I would just be like less patient.
Gotcha. Okay, that makes sense. And to kind of tie into that with the labor market, currently right now the unemployment rate's about a 4.2%. So Bradley, sticking with you on here, let's start with as the president, what would you do for that piece? Like with interest rates still in mind.
Well, there's a couple approaches I would have. For the labor market, everything that I just said, I want the economy moving. I want people investing. So I want interest rates as low as possible, right? I want businesses and consumers to be able to take out a lot of loans and spend a lot of money. To do that, you have to have lower interest rates, right? Now, when businesses invest, they invest in employees, they hire more employees, they invest here in the United States, right? You want the most business-friendly type economy. So I want interest rates as low as possible, right? So I'm doing everything I can to encourage my federal chair to lower interest rates. Let's get these jobs moving and build a very business-friendly environment so people will hire more people. Now, our employment's pretty good right now in the U.S., so I'll get to that when I'm the federal chair, speaking from that level.
Gotcha. I'll pause in the federal chair for now. So, Nick, as the president with the labor market issues, how would you handle it?
Yeah, I think I'm kind of in the same boat with Bradley there. I'd say the lowering the interest rates makes the most amount of sense. I don't know that I would be as aggressive. Would maybe be the only difference, just because things are in a good spot. I don't know that we are like trying to fix a very urgent problem right now, where I think we have some room to kind of like slow roll it, where I think some of the problems we've maybe had in this presidency with urgency, we've seen like tariffs, how it rocks the stock market and stuff like that. So maybe a more cautionary approach to it, just to kind of test how the market responds, maybe would be the only thing different. But other than that, I'd go in the same direction, just a little slower.
All right, that makes sense. So we're gonna keep it with you, Nick, as the federal chair. What's your stance on this? What are we gonna do?
Yeah, I mean, and maybe I'm living like a, make believe, wonderland or something like that. But I think I'd take the same approach. I'd have everybody working in unison. Everybody agrees with everybody. Nobody's fighting each other. And we're going to lower interest rates. We're going to slow roll it and help stimulate the economy even more. So I don't think I would take much of a different approach.
Yeah, I mean, especially in the United States, we never really have political upsets, so that makes sense a lot.
We all agree with each other, and kumbaya, right?
Yeah. So, Bradley, you going to be more realistic on yours as the federal chair? Or
Yes,
what are you
I
am. Okay, perfect. What do you got?
So, okay, number one is inflation for the Federal Reserve, right? Number two is the job market, and they're contrary to each other, right? Like you drop interest rates, you increase the job market, but you potentially risk increasing inflation. So Federal Reserve Chair Jerome Powell keeps saying like the market is at or near maximum employment, which means 4.2%, which I think is the unemployment rate, is really quality. It's a really good quality unemployment rate, and that's the unemployment of people who want to be employed, right? It's not like out of 340 million people in the United States, only 4% of them aren't employed. It doesn't include kids or retirees. So I would probably say, like, I want to increase employment, but unless that unemployment number bumps up to 4.3, 4.4, 4.5, I would keep interest rates where they are. And then if I start to see the labor market shake, I would start lowering it quickly, especially with the quality of our inflation numbers right now.
Yeah, if anybody has watched any episode, the high indicator for us, if when we were going through the big recession talk 3-4 months ago, it's about employment's a heavy pillar in what to look for, and if that falters, then that's when the panic of the recession issue actually happens. But we talked about it. We said during that time, don't panic. There's not a reason to at this point. It is how we felt about the current political climate that was causing, I guess, concerns, but it wasn't actually affecting where we were with the unemployment rate. And here we are, and we're not in a recession, as we talked about.
It's funny because like the job market, like everyone was like, "Hey, we're in an economic collapse because of the stock market," but the job market was great. Prices were going down, but the stock market was bad, and it was like, that's where I lose a lot of trust for people when they're like, "Hey, this is a recession." It's like, well, the stock market or the job market's really great. People have a job, prices are going down. Why are we in a recession? So that's where it's like recessions really are tied to jobs a lot.
Yeah. And the stock market, like I always say, is tied to vibes. That's really what it is. All right, Nick, cap us off here. So what are you going to do for inflation? Or sorry, the labor market for that one?
I was kind of looking at the labor market too, and one of the things that was interesting, and I think Bradley kind of hit on it a little bit, is the percentage of actively looking for employment that it's measured. The percentage of that against the entire U.S. population has actually gone down a little bit. When I looked it up, it was like 62.4% of the population is actually considered in that. And so when you're talking about like a 4% unemployment rate, it also means there's almost like 40% of the population that's not working. Obviously there's, kids in there. But I'm kind of curious, and now just kind of talking through it, is like the population that is, retired and not working and things like that, like that's almost, it's not quite half, but it's getting up close to half, and how it impacts the people that aren't in there, you know what I mean? And that's where I kind of get a little bit unsure, because it is, it's a good number, unemployment rate, but you've also got, the number of people that aren't actively looking. What are they doing? That's a huge, drain on the economy too. So I don't know if I've got the answer to that one, but that's something that I was kind of considering as well as we were kind of talking through that.
Yeah, that's why I've always been a little like, for me, like you look at the data, inflation, stock market, job market, everything looks great, but there's just like that unease in the back of my mind. Is like, is the labor market as healthy as it looks? And it's questions like you just asked, Nick. Like, there's long-term unemployed people who aren't looking for jobs anymore aren't included in that, retirees, kids aren't included in that. So there's like a couple 100 million people in the US who aren't working. Granted, they don't want to work, but like, what is that strain? So that's where it's like, as a politician, I would want jobs, right? As the Fed chair, I want like constraint and like
of like stability, probably.
Yeah. But as a politician, I'd be like jobs, and that's what every politician ever has said, and it gets them elected. So it's just something where it's like, okay, I kind of get that mentality a little bit.
Makes sense. Mm-hmm. All right. So whoever wants to take on this one, we'll go with Bradley since you're on this still. Now we want to avoid high inflation. So as the federal chair, let's start there first. Currently, the goal is 2%, and we're at a 2.4% right now for inflation rate. What are you going to do as the federal chair?
Well, this one as the chair, like,
Yeah.
I wouldn't touch it because the second you drop it, it's going to slowly increase prices because of everything we talked about. Increased economic activity, which means increased spending, which means increased demand. When demand goes up, prices go up. So if I'm the chair, I would say leave it unless
We're
the
chilling.
market changes. Leave it,
Makes
don't
sense.
touch it.
Okay, perfect. And I'll keep it with you. So cap us off with your take as the president. Is it jobs, jobs, jobs? Is that what's going to help with the inflation there?
Yeah, if I'm the president, I wouldn't think about interest rates. I would think about like getting economic growth with jobs. That like I have the reverse priorities of the federal chair. I'm like economic growth, economic activity, investment in the United States or whatever country, right? And not foreign countries. I want people to invest here and theoretically the more competition you have, then the prices could go down, right? And like that's like an economic principle, but it has to work. Everything kind of has to be going a good way. So like in sense I'm like, okay, I'm a capitalist. I want things to go really well. So I'm going to just keep things where they're at.
Okay, perfect. And so, Nick, this is for you now. Start as the federal chair. What would you do?
Yeah, honestly, I think and maybe this is more looking at it through the lens of the president, but I think I'd probably do similar to what we've seen with some of the like tariffs and fines and things like that. And like I know it hasn't been super popular, but yeah, I mean, reward companies that are bringing jobs to the U.S. and punish those that are putting them overseas. Fine companies that outsource jobs and create more repercussions for companies that do layoffs and things like that, or increase the unemployment taxes that they get. Like I would do those types of things to try to encourage companies to create open jobs, maybe even benefits for hiring and things like that. So
Nick,
that's kind of where my mind
did
goes
you
to it.
hear that Apple? So like our Q1 GDP was really low because people like our net exports were way off because people were exporting and importing as much as possible to avoid tariffs. But Apple moved a bunch of their stuff from China to India, and then Tim Cook said, "Well, we don't work in China because it's really cheap. We work in China because they do the best manufacturing." Then why did you just move it to India? Why didn't you do it to why didn't you move to the United States?
Yeah, what are we doing? Wow.
I don't know if you saw that.
I didn't, but it is funny.
Yeah.
Yeah, that's funny. That's a good question. I don't know. Who knows? Well, I don't know. I don't think you could do it in America because we don't manufacture anything, right? That just doesn't logically make sense, apparently. So,
Which, okay, another point. It's funny that people said this. Like, there are the debates on tariffs, and then there were like the bad parts of the debates where, like, it's a great debate to have. How will it impact inflation and the job market and just prices on consumers? Those are good discussion points when it comes to tariffs. Here's not a good discussion points. People are like, I don't want to make t-shirts in America. I want to make high-end electronics. That's such a stupid argument, and it can prove these people wrong. Taiwan makes a bunch, or is it Taiwan? Taiwan, I think, makes a bunch of AI chips, right?
Like, yes. Yeah.
And then
that's our, I believe maybe beforehand, but that's like our main. We import mainly from there.
So everyone's like, oh, the U.S. like people who are workers in the U.S. only do high-end manufacturing, right? That is so not true. Like we can, like, if so, how come people are still going to work, working on farms or, chopping up beef, and all that when Taiwan's making all our chips for dirt cheap for us? So it's such a bad argument when it comes to tariffs. Like there are good arguments to have. That was one terrible, poorly economic argument.
Gives you pray that comparison is very terrific. So overall, gentlemen, just to kind of, I feel like I'm wrong potentially here, but has the impact of tariffs really been an actual impact currently right now? I don't feel like that's happened. I don't know as well if it hasn't. Are we still waiting to see as such? Because we have imports before the tariffs were even announced. Are we just still in that lull of, okay, these are just the imports we had before tariffs were hitting, and in maybe a month or two, I don't know, just random number,
Yeah.
month or 2 to 3, we're going to start seeing the impact of the tariffs that were implemented across the board. So what is your overall feelings on them right now?
Yeah, I mean, what I think any impact that we've seen so far has all been like anticipation of changes coming down the line. I don't think any of the actual impacts have like gone into effect. At least not anything significant. At least I think even the China ones, those got postponed. What was it, like 90 days or a couple of months or something like that?
He did do a tariff deal with China a couple weeks ago.
Yep.
That's in right now.
I think, yeah, I was about to say, and I think it was Monday or sorry, not Monday, Friday. I think China even commented on it, like it's still in effect or whatever.
Yeah.
Like it's still to go on there. But the other thing to talk about too is I saw a headline that Canada, or like Trump is mad at Canada because they said a bad word or something, and now he's placing, what is it? Like you going back on the tariff deal? I don't know the stats
put
of
a
that right
pause
now.
on trade talks, and they didn't say a bad word. They said they were going to charge service charges on digital services from anything from the United States. Essentially, they put tariffs on digital services is what they did. So
Perfect. So they didn't just hurt his ego. It was actually he believes that they're hurting the thing.
Yeah.
Okay, just making sure.
So to go back to your point, like obviously if we just put a bunch of tariffs on every country and nothing changed, that it would probably be a bad job unless it worked perfectly and all the jobs came to the US. However, when you get deals done and decrease the tariffs that they charge us, that is a very positive thing. So it's very positive with China because they dropped our tariff rate. And it's not like 160% like we said we were going to do, right? All that fell down. We did it with England. That dropped down. Those are all very positive, so we won't see positive economic impacts. However, all the like Liberation Day tariffs, other than the deals that are done, are mostly on pause.
Gotcha. So, I mean, that's a good way to look at it too. There is potential positives for actually having these. And I can even for me, I'm wondering, okay, when's the ball going to drop when we're going to pay $100 for like a case of Coke, right? And that's very fair. That's a good outlook. I think a lot of people can do, including myself. Like
the biggest one
what's
was
going to
always
happen?
China, right? Because
yes, 100%.
As Ed Helm said in The Office, that's where they make stuff. So China's done.
Shout out to
the
Ed.
tariff deal is done. It's positive. It's a good one. We're better than we were before. So like all the cheap plastics you get, all the crappy clothes you get from Walmart, that's going to stay cheap.
Yeah, my biggest complaint with as the team headline reader here, it's very ridiculous to me when I'm just hearing a bunch of like tariffs, like we're going to go to literal war, not just a trade war over tariffs. Like I was like, there's just no way. It doesn't help with business when it comes to like the big global hegemonic powers that are around, because those are going to be the ones that don't benefit the most from it unless you supply weapons to another country that's fighting for you. That's not how that works. And
I haven't seen a commerce war since, I feel like, I don't know, the revolution.
I was gonna say, I was my first thought was the 20s, and I was like, no.
Like
and
physical combat over prices hasn't happened in 300 years.
The
that was
Boston
like over tea or
Party,
something,
maybe?
right? Yeah,
That
yeah.
And that was taxation, but
yeah. Hey, taxation's theft. Rise up. Shout out to Carrie. All right, team. Well, thank you for sharing your inputs. Did I miss anything for the inflation goal? Anything that I missed from you two that you want to go over before we hang up for today?
No, inflation looks great, and prices, like one thing that people have to remember, except for some things like gasoline, prices don't go down. They will always go up. It's just at what rate do they go up, Like we had terrible inflation in 2022, 2021, 2023. That increased prices forever, right? So now what we need to do is stop the hike of prices and get them to slowly increase. So they'll always go up. They'll always be more expensive tomorrow than they are today. It's just at what rate.
That makes sense.
I'll add to because I was looking at something, kind of headline news guy. I saw something similar that said the value of the dollar has lost like 10% this year, which is like the highest in forever. And I was like, well, how is that possible if inflation is low? So kind of looking into that, the inflation obviously is getting low. Internationally, though, the dollar has lost about 8% value comparative to other currencies and stuff like that. So it is interesting that, domestically our dollar is stronger, but internationally it's gotten a little bit weaker.
Yeah.
But it was also on like a very high, and it's kind of gone down a little bit. And so if you do see something like that, it does make sense, but it's just kind of like we were probably overvalued for a little bit and has kind of gotten back more in line. So just wanted to kind of call that one out because I saw that headline too.
Yeah, I've been keeping track of that. Wall Street Journal has a dollar index, and every day they're like, a record 0.02% drop. And I'm like, okay.
All right,
love it.
Perfect. All right, gentlemen, so for today, we're going to wrap up the episode. So I'll have an open forum so anyone can start us off with what they want to talk about regarding the economy, any tips, tricks, things that you would look out for right now, or just, hey, don't worry so much. Everything's going to be okay, or panic. So Bradley, we'll start off with you. Oh, Nick, go ahead if you want to.
Nick,
go ahead.
yeah.
I want to start because I know this our game, our $100,000 stock buying game. I've not been doing so hot. I get it, and I
You're
just
up
want to say
$20, bro.
I know, right? I made $19.95. But I just want to say that I think I bought high. At a very high point, and I definitely bought for like a 10-year investment kind of strategy. But I want to also share in my real life trading, and I know I've talked to you guys about the double and triple index funds and stuff like that. My triple index fund is up 50%. Since I bought when it was all crazy and stuff, and I threw some money in there. It is 48.74% increase since I bought. What was that? Just a couple months ago. So in my real life trading, I do much better than I have been portraying in this game. So I just, so I wanted to share that so you guys know.
We totally believe you, Nick, for sure. No, I have a girlfriend. She just goes to another school. You guys wouldn't know her. It's fine. Bradley, what do you got for us?
Speaking of the stock market, hit record highs on Friday. I think it closed right below record highs. It was like record highs, and then right below close it dipped down just a little bit. So my recommendation, anyone who told you to sell your 401k on April 2nd, is a liar and a thief, and never listen to them again. Like, seriously.
What?
People were like, hey, you should be really worried about your 401k. The stock market is crashing. Maybe sell your stocks in April. And if they did that right now, they sold low, lost probably tens, if not hundreds of thousands of dollars. So if you know someone who did that, usually, it's usually because of politics, right? Then I would never listen to that person again, right? We were like, yeah, it does suck, but it's okay. But there are people who are like, yeah, the stock market's not good, tariffs are blah, 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 get out of international, work your 401k, don't freak out, because guess what? It's 2 months later and we're at record highs, so chill.
Okay. I haven't heard that one at all. Usually I'm on top of that one.
We've talked about it a million times.
Oh, right. No, that's where I heard it. Yep, you're right.
Hold them accountable.
Hold them accountable. Yep. No, as you said that. Yep, I got you.
Yeah.
Well, gentlemen, I appreciate you today. For everyone listening, I appreciate you so much for being part of the FF family. This was the Freedom Finance Podcast, Saturday, June 28th. As always, we appreciate you. Have a great day. Good afternoon, good evening. We'll see you next time.
Adios.
Peace.